Good morning, David Combe here with the CBSAM Debrief for Thursday the 22nd of July. Well, after what was the best up day in for this year at least for the Dow, we have seen overnight a little bit of a pullback here, and I guess that's a little bit unexpected. A little bit to be expected. And whilst we're still seeing this debate or committee meeting, the Gang of Six, as it's called, meeting in the US there to thrash out the solution to this debt ceiling problem. That's probably an excuse for people to be quite happy to move to the sidelines and back into cash after a good solid move up like that. So that seems to be what happened, and we see S&P 500 broader index down a little less, and NASDAQ down a bit more. I think there are a couple of results that came through there that were less than stellar, so that probably dragged on that a little bit. It looks like the rest of the Americas was mostly flat to up, although Mexico did look like it took a little bit of a hit there, 1.15. Europe, seeing all green numbers, which is a bit of a change. FTSE up 1.1, CAC 1.61, and the DAX up 0.4. Milan up 3, and Madrid up 3.6 as well. Now that's probably a bit of a follow-on from yesterday's session here in Asia, with the Nikkei up 116, the Hang Seng up 101, and our market up 81 points, which was again one of the biggest up moves we've had this year. For the local region, futures are suggesting a pretty flat sort of day. The the Nikkei up 20, Hang Seng 146, and us just down 7 points there. Okay, let's have a look at what the commodities are doing. We had West Texas down just 1 cent here at the moment, so very little sticking up here, seemingly in this high 90s area. It seems to be becoming its sort of its new home. Natural gas holding pretty steady here at $4.50. I know we're pretty close to being able to exit out of this natural gas warrant for a reasonable profit, not perhaps as good as some of our other warrants there, but a profit is a profit where we can take it. So we'll keep our fingers crossed on that one. That'll happen pretty soon. Okay, in the rest of the commodity space, the softs we're seeing in the bottom half of the list here, pretty much all green, with rough rice making another move here, higher here, 1.33. Wheat up 2. They're pretty much the standouts in that space. And then we had corn down 1.38. It's a big move to the downside there. Orange juice down 0.65. And that looks to be about it there for major movers. Copper up 1.4 cents to $4.45. We still have that ongoing problem with the that major mine in Chile, with industrial problems and production problems affecting or helping to support the price of copper here. Gold back above 1,600, $4.90 the rise, and we'd expect that with the situation going on with that debt ceiling and the uncertainty that in lieu of there being anywhere else to go, that's seen as not a bad place to be, I guess. Silver back above 40, up 62 cents. And rather than going into the usual list of commodities, we might start on the Falcon Trader here and just go through what's what. Aussie dollar back up here towards levels of resistance if we're working on the basis of this trading range between 108 and 104 to the downside. Then we'll use just 108 as a potential signal to be looking at going short. The euro at 1.4215, pound 1.6154. Most of these have moved up overnight, strengthening against the US dollar. I think the exception was the US dollar yen. Yes, so that has actually weakened there against the yen a little bit. The Canadian 0.8197, the CAD 0.9475, 47 rather. The Kiwi 85.63, and the US dollar index. We'll just have a quick look at that chart here. Is pardon me, holding this inner upward trend line. We're now down around 75, so you can see where those losses in US dollar, or the US dollar strength, has come off there, and that's why we're seeing most of the cross pairs strengthen. Also, of course, US dollar weakness is going to be supportive of the precious metals, or any commodity for that matter. And there we are. They're just nipping below 1600, sort of looking a little bit like we might be finding here. I know it's early days yet, but a little bit of resistance here at the psychological level of 1600. Maybe some people are thinking it's a good time to take some profit. We have had a $100 rise up here in the last 3 weeks or so, and maybe a few people are looking at something with 1.6 in front of it and thinking, wow, should it really be up here? So anyway, that remains to be seen. Let's have a look at silver. Again, doing a little bit of consolidation here, a little bit of hesitation, but maybe building up a bit of a base here to then push higher and close in on that gold to silver ratio disparity. Having mentioned that, apparently if you look at the gold-silver ratio over about last 200 years, it's actually right about at that at the mean level. So those have got to be a little bit careful about taking some of these concepts a little bit too far. Anyway, okay, let's have a look at the economic calendar now for Thursday, the 21st of July, I think. Sorry, I said the 22nd on in the introduction there. So we've got some more US housing sales, and as expected, they did disappoint. We're expecting 4.9 million for new homes, or for sales rather. We got 4.77, and rather than an increase in existing home sales, we actually got a decrease of 0.8. So it's sort of in line with expectations. They're a little bit worse, and perhaps. For the rest of the day here, we've got monetary policy report, which is a little bit like the RBA report for Canada, I guess. So that's a reasonably significant one. Then we have some Kiwi credit card spending numbers, some PMI numbers out of Germany, going through to the UK, retail sales in Switzerland, ZEW survey, Eurozone meeting of finance ministers in Europe. That's probably going to be an interesting one in terms of any resolutions that might be afoot there to sort out some of the mess that they find themselves in. And that's about it. Through to tomorrow, I've got a lot of Canadian data out, CPI numbers there, and some more German numbers as well. Okay, I'll just finish off by having a quick look at some of the stocks that I've been tracking of late. A couple of these gold stocks that have been punished a couple of times by all is now forgiven. I've got Kingsgate back up here above $9 handle. It's been a little bit of a rocky road down along here, but that's certainly proving pretty kind for those who are prepared to be a bit patient. Similarly with Medusa, I got caught out on this once getting at $7 just here on this little false break, only to see it trickle all the way back down to $6, but again forgiven there because that started to move up again. St Barbara starting to put in some reasonable work to the high side here, up towards $2. And there's a couple of other gold stocks that are starting to creep up the rankings in the VectorVest system, and I'll cover those perhaps next time I'm doing the AM debrief. Just saying what else there is here to have a look at. Luca, ILU, has been consistently a top VectorVest selection for value, safety and timing, and for those people that have been on board that, they certainly would be pretty well rewarded here. We had that breakout here just the other day where it took out that old level, and it's really jetted up here pretty strongly. And I think that probably covers us. Probably have a quick look here just at the index. I know I was certainly expressing some concern and dismay that if we didn't see this sort of 4,500 level hold here, then we'd start to become concerned that we'd be looking for the next level down. And probably just bring that up by going to a weekly, where we've had only 2 occasions where we've been down to 4,200 since the GFC. One was that flash crash last year, and the other was the announcement of the resource super profits tax. But since then we have held within this range of 4,500 to 5,000. We know we sell up at 5,000 rather, and we're pretty comfortable buying at 45, and we know we can have a pretty tight stop loss there, and if it dips below that, we know we're wrong. I will just add one final thing, which is a recommendation we're putting out yesterday to any clients that are prepared to listen, and that was BHP. Now, really feel that that move up here has, the move up here, and that actually is a weekly, so let's just go back to a daily because it doesn't look quite right. Okay, so we're looking for this 42.50 odd level here to be our support. Potentially below that $40.50 or thereabouts, where we could have our stop loss, a little bit over 5% away. And we've seen that previously this has been a reasonably good level of support. Back here, a little bit lower, around here, consolidating in here. And they've just come out with some exceeding their production numbers on 4 different commodities. They've taken a stake in that Petro Hawk, which has gone down reasonably well with most of the analysts that I've been reading, and we see this as a pretty low risk trade. So anyway, we'll see how that fares out. Okay, so leave it at that. Till next time, thanks for your attention, and bye for now.